The problem is actually we have to decide whether we have to look gold as an investment. It's just an asset.
So what we can see is whenever the gold price moves up, this assets also move up in value, and it gives generate returns which are similar to the gold price rise. So ETFs are the most common method because it is liquid. It can be bought through exchange, sold through exchange. You need not to ask anyone.
What is the advantage that I get compared to when I purchase a gold in a physical form? Let's say as a jewelry or a coin. What is the advantage that I get from purchasing gold ETFs or mutual funds?
So first of all, this gold, when you are buying it, then you pay something called as upfront charge, which is GST, generally 3%. So making wastages, all these things are charged to the customer.
Hi all, welcome to the channel Rich with Ram, and here we are with Ramakrishnan sir. We have seen the news, we have been watching the news continuously for the past 3 to 4 months. The gold price is shooting up so high. The problem is actually we have to decide whether we have to look gold as an investment. It's just an asset. But the problem is we can't decide because it's our emotional thing, it's a pride thing, it's a social status thing. Okay, if you or if anybody wants to invest in gold, this video is enough for you, because we are going to discuss what are the investment platforms available and what are the investment, what are other investments when it comes to gold. Like there are ETFs, there are other like DigiGold and all. And sorry, I didn't know, but that's why we have Ramakrishnan sir, who is a certified financial planner and wealth manager, who is serving 1,600 families and guiding them on their financial journey.
Thank
Namaste,
you.
sir. Namaste.
Namaste.
Thank you for having me as your host in your channel. Sir, let's talk about the gold investment, sir, because it is so much interesting for me as well, because I'm a little bit of my family background. We are more into gold other than like mutual funds or stocks or something, some other investment assets. So if I want to invest in, I know there are there are other assets which have given more returns than gold, but still some people like me and my family are obsessed with gold. So I want to know what are all other options in gold investments, and I wanted to discuss with you, sir. So first thing, as you said in the previous video, why the gold price are, we have discussed it, like why the gold price are shooting up, and we have not predicted actually, but we have some views like how the gold price will be in the future. Let's talk about the gold investments, sir. So what are the possible ways that we can invest in gold?
See, today the traditional way is just go and buy the coin or the jewelry. That is the traditional way, physical way, where people are used to it. But over the last 10-15 years has been bought electronically.
Okay.
Also. The most prominent methods which have come in are gold ETFs, as
Okay.
you have rightly. ETFs are exchange traded funds.
Okay.
This gold funds will be managed as exchange traded funds.
Okay.
They can be bought through a exchange.
Okay.
NSE or BSE are the prominent exchange. There are many funds which have come in. Those funds have now launched gold ETFs. We can go buy those ETFs at their value. Their value will be somewhere. Every fund has different kinds of value, but the underlying asset is gold. So what we can see is whenever the gold price moves up, this assets also move up in value, and it gives generate returns which are similar to the gold price rise. So ETFs are the most common method because it is liquid. It can be bought through exchange, sold through exchange. You need not to ask anyone. The second way is not everybody is comfortable with a demat account. So go through a mutual fund. You can go through a mutual fund which are called as gold mutual funds or gold saving mutual funds. So they can be bought either as a lump sum or as a monthly investment called SIP, and you can buy it in staggered manner or a lump sum manner. Again, you will get this gold savings fund invests into ETF, their underlying ETFs, and they bridge the technological point, or they ease the kind of purchase. So you can buy it. The third way is digital gold, which is there. There are authorized platform where you can buy digital gold. So you will not get gold, rather you will get a statement saying that you have bought this. There the idea is you can buy the gold even to the extent of 100 rupees. So you need not go for a larger amount. So people say that a smaller tiny amount, 100 rupees, 500 rupees, 1000 rupees, 10,000 rupees, you can buy the gold as per your wish. You can buy n number of time. You will see the live prices and you can buy at that price. It gets credited to your account. Whenever
Credited as a gold.
it will show as digital gold.
Okay.
It will be credited as gold in that account actually.
Okay.
You will get a passbook kind of thing or statement. So whenever you want to encash it, you can encash it by value money, which is based on the gold price at that point of time. You can take it as gold. There will be handling charges which will be there. So that is the only point which they have to. There was some other instrument called sovereign gold bonds, which were issued by Reserve Bank of India, but last 1 year they are not issuing it. So
Which means I can't buy,
SGB from the Reserve Bank of India anymore.
but still SGB is available in the market.
They are in the market. You can go and buy it. But their values have been shot up. So you need to be little careful about it. Buying gold through exchanges, it doesn't reflect the NAV. The net asset value could be something different, but buying and selling demand should be something different. So you will get based on the demand. So probably you may pay a little higher when things are shot up. The NAV could be very, very different. So that is something which we need to be aware of. So the same thing happens with gold savings fund also, as well as gold ETFs also. But in gold mutual funds, you don't have that, because your NAV is anyway calculated on everyday basis from the fund, and you are going to buy it from the fund. So it will be almost equivalent to you buying with whatever the expenses that fund is charging. So that is the only thing which you need to.
Sir, one more thing, I just sorry to interrupt. Actually, it's a little bit interesting topic for me, so that I'm a little bit curious. When it comes to ETFs, gold ETFs, or gold mutual funds, or SGB, what is the advantage that I get compared to when I purchase a gold in a physical form? Let's say as a jewelry or a coin. What is the advantage that I get from purchasing gold ETFs or mutual funds?
Very good question. So first of all, this gold, when you are buying it as a coin, let us say, then you pay something called as upfront charge, which is GST. Generally 3%. In some shops it is going up to. So that is what you are going to pay as cost. This cost is not recoverable.
Yeah. And it's in this cost is actually not related to the gold weightage, right, sir?
Yeah, it is very important that you whatever be the value you are buying, on the value you pay 3% or to 8%. Somewhere 3, somewhere 5, somewhere 8. Various shops have their own kind of norms. But in mutual funds, what you do is the expense ratio. So in this, expense ratio will be say around 1%, 1.2% kind of thing. That is what you are going to pay as expense ratio. In terms of gold, the costs are your upfront charges. Sometimes you call it as making charges.
Yeah.
Sometimes you call it as your depreciation. All these are charged to the customer.
And wastage too, right, sir?
Wastages.
Yeah.
So making wastages, all these things are charged to the customer. So this is not there here, because you are not buying the jewelry at all. There is no case of wasting charges or wastages or making charges, etc. So that way you save that cost. The third thing is on the safety aspect. You don't own the gold, so you don't have no worry with respect to theft. So it is there in your account. So most of the things, if at all ETF, it is there in demat account. If it is gold savings fund, it is there with mutual funds. So you have to carry is your certificates or your statement of accounts. So you don't have that safety aspect which is there.
Sir, and also one more thing I like to add. Even my wife's family, they have the jewelry and they put it in a bank, and they have the locker fees, and they also have insurance also. So it's like for the locker we have to pay, and for the insurance we have to pay. It all extra when it comes to physical gold, right, sir?
So again, this locker charges are additional, where most of the time people don't wear all the jewelry for every function. So they have to secure it. So they go to a locker. This other aspect which we are now talking about is when there is purity problem.
Okay.
So sometimes you go to a jeweler, he is not trustworthy. All we buy is a yellow metal.
Yeah.
We don't know whether it's 18 karat, 20, 22, 24. We don't know. Many people realize when it is sold. What was given as 24 karat or 22 karat turns out to be 18 karat. This has happened in the past.
Yeah. And we have also there are many news that saying like I've been cheated by the jeweler, and when we go and see the jeweler, no, this is not my jewelry I given you. So there are problems.
They have problems. So sometimes they are not ethically made. Sometimes that mix is little higher. All these problems most important thing is liquidity. People think that they invest in gold for price rise. If they are investing for price rise, then they have the option to exit also. Not many shops will give you back your money. You go with your coin, you go with your jewelry, you can convert it as jewelry, you convert it as coin, but there is no way you can just go and
Sell it and get money.
sell it and get money.
Okay.
So it's not business for them, so they don't have interest.
So even if I go with the coin, let's say 100 grams of coin, and if I go there and give to a jeweler, and they are going to make as a jewelry, right, sir? As an ornament. And again, there comes a wastage, there comes a making charges, and there comes a GST also, right, sir?
Correct. Everything is there added to this cost. So you always have no problems with respect to your purity cost or your ornament cost. So everything is there. You cannot liquidate it when you want it. So many a times you don't get the cash. So that is another problem which comes in. All this convenience of holding it in very very. On the other hand, if there is a jewelry, lady can wear it. It gives her pride. It gives her beauty. It increases her beauty or happiness. That you cannot have it. So what you are going to consume on daily basis and what you are going to, this has to be very very clearly segregated. There is no alternate for consumption. Definitely something can be done about investment. We have lot many investments, but we don't earn from it.
Okay, sir. Okay, sir. And I want to talk about that gold mining mutual funds. How can it be related to gold? I think gold mining is it's a different business, and gold is another asset. So how is it actually related to if a gold price rises? Is there any possibility that gold mining mutual fund price is also going to?
It's not going to be 100%. The chances are 50-50, I will say. Because as you have said, gold stocks or mining stocks are stock in itself, traded in the stock exchanges, or they can be bought stock exchange.
But their underlying asset is gold.
Means underlying asset in the sense they do the business of gold.
Okay, mining business is there.
Yeah, they do the business of gold.
Okay.
So like many companies, they do the business of iron or steel or any other thing. Guys, they unearth the gold from the earth, they process it, they refine it, they sell it to the customer. So this is what their job is. Sometimes they don't get the margins. Gold price is rising, but they don't get the margins. Stock price do not rise. Sometimes gold prices are increasing, but world stock markets are down. Because of that, gold stocks are also down. In a way, we have to see that trend of the stock market. So that is how we can. So the risk remains there. Not that every time gold goes up, your gold mining stocks also or gold mining mutual funds also will go up. So we will have no time there.
Okay. Sir, and also I wanted to ask, when it comes to our share market like Nifty and gold price, let's say today we are 2025. Let's talk about like 2010, 15 years. In the 15 years of period, what is the growth rate when it comes to gold versus our Nifty?
2010, let us assume that gold prices, the real prices I can say, it is around 34,000 to 35,000. So that was and today we are at about 87,000. So 34,000 to 87,000 is approximately 1.2 times or 1.3 times. Asset class which you are comparing is say stocks. In stocks, I am not going to a normal mutual fund, but I am going to an index.
Okay.
Index in 2010 was around 5,000 levels. Today the same Nifty is around 25,000 level. So it has moved up by 5 times. So gold has moved up by 1.2, 1.25 times, but this has moved up by. So it depends on the asset class. What the movement also. So somebody can think that why not whenever I want to buy gold in the long run, let me buy equity fund and then stay invested for 15-20 years. Whatever the excess return, let me buy extra gold. This also can be a thought process.
Yeah, that's actually the main the purpose of this question is for that only, because if I'm going to invest in gold, it gives only 1.3x. The same money I would have invested in Nifty or any other stocks, I would have gotten around 5x returns. My end goal is I want to buy gold. So why don't I just invest in stock and get 5x return, and again I can withdraw the money and again go to a jewelry shop and buy gold. I think it's going to be 3.7 times I'm going to get money, extra return from stocks, and I'm going to get extra gold for the price. I think I thought it as a best strategy. So I just wanted to start from that, and I'm going to ask you this question. So what do you think?
Yeah, in a way, no, see, now we are talking about 15 years period.
Yeah.
20 years period, data could be, slightly different. So we don't know because, gold is at a higher point today. Talking when gold is at its, peak. So if you did the same exercise 2 years back, you would have got, even lesser returns.
Yeah.
You cannot, when we are speaking, that also matters.
Yeah. Understood,
So
understood.
this is very important that every time the same data cannot hold relevant, and we have to be realistic about it. Longer period of time, I can say last 40 years, say the Nifty or the index Sensex, we can say Sensex, let us talk about. So last 40 years it would have given a return of about 14-15%. Gold would have given a return of about 10-11%. I am talking about a CAGR. So that extra 3-4% annualized return is always there on the cards, and that return, as you say, it is good. But if you take the 5-year call and all, we don't know which asset class will have that. For a longer period, definitely it makes a lot of sense.
And in the longer period, just a 3-4% is actually, when we calculate in the numbers, like in every SIPs or lump sum, it is actually much bigger, right, sir?
Correct. Let us just assume that, say in 20 years, your investment asset class, if it has given 15% return, it would have given about 16 times. If it has given 12% return, it would have given about 8 to 10 times. If it has given 8% return, it would have given to 4 to 5 times. So what percentage your asset grows, that matters.
Okay.
So your returns are definitely a function, and you need to understand that.
Sir, thank you so much, sir. Because gold investment is actually a little bit concerned for people like me and like family like me, because we have a little bit of obsession for the land, real estate, and gold. Because it's been our history says that land and gold is two things that we can trust blindly and invest. So that's why I wanted to put all these questions with you and ask some clarifications. So thank you so much, sir. Thank you.
Thank you. Thanks a lot.